Yes. Okay. Here we go, ladies and gentlemen. We are setting up and on our way to going live. I don't know when it's going to go live, but it'll probably be sometime in the middle of when I'm talking. So, boom. We are live, ladies and gentlemen. This is Tio and the Arcane Bear. We have a fun episode for you today. For those of you that are in the private group, you will know that we have constantly been going over the Bear Forge episodes. And with that, one of our favorite aspects of the Bear Forge is Baloo, one of our private members and one of the analysts that we like to work with. The idea here is to create a broader perspective, and conjecture between two people can be so valuable. So let's drop in. And for those of you that don't know Baloo, here's Baloo. Baloo, how you doing today?
I'm doing quite well. Thank you for the opportunity to be featured here on the main part of the channel. Like you said, we've been providing service to the Bear Den for a while now, a few weeks, at least almost a month now. And, this has been a fantastic addition to the Den. I've really enjoyed doing these types of forages, these bear forages, trying to find these nice setups and really getting a macro perspective on the market as a whole. So thank you for the opportunity to come in here and show my stuff to the main group.
Perfect. So just as a little bit of a heads up, how this is going to work today, guys, we're going to go over a few of our favorite altcoins, things like Link, Cardano, AAVE, and we're probably going to do this at least once a week to start, and maybe even more as time goes on. This is today's first trial run. So remember to give us the thumbs up right out the gate if you like this content, and to leave your comments. What I want to do is kind of brief everyone. So for those in the private member, you'll know where this conversation is going. Blue and I have been doing these private Bear Forge updates for everyone in the private group. And this week we were going over something that I thought was very interesting that I think we should share with everybody, which is the confluence of price of the assets versus Bitcoin on the way down, as so many of the charts that we've been going over looked perfect in the accumulation channels, reaccumulation channels versus US dollars. I think there's a really big conversation going on here right now that really focuses on the fact that a lot of investors move their profits back into Bitcoin instead of into US dollars. So the initial trade is taken from a US dollar standpoint, whether it's USDT, USDC. And then from there, we're seeing a large relationship between the return to the nominal value of Bitcoin at that moment, which is something that we hadn't seen before. I think that these are the first cracks in that dam as well for Bitcoin becoming the monetary reserve asset of this ecosystem. Funds, hedge funds, some of the biggest capital wealth managers on the planet right now do not measure their portfolio alpha, which is a term for growth in your portfolio, in Bitcoin. They measure it in US dollars, but there may be a time not too long in the future where they start measuring their assets in Bitcoin. Now, that might be 5 to 10 years away, but I think we are starting to see the first cracks in that dam. So that is what we are going to be going over today. So we'll do this split view moment here so you can see both of us. And then what we're also going to do is, Blue, why don't you just go ahead and kind of take us through some of these thoughts today. And maybe we'll start with, I think, AAVE or Avalanche, Chainlink. Pick any number of the ones I think will be good to go. So you're host now as well. So you have to give that back to me afterwards.
Sure. Okay. So yeah, let me just pull this up here on TradingView. Perfect. Yeah. So I'm gonna pick GRT. I've got other coins set up to go as well. But basically, what we've been doing basically since the shakeout is we've been trying to determine where support is being built. And how you do that is by trying to see the price action develop on a line or area of support. And what I've been noticing is we've been seeing the price characteristics in terms of the candles kind of building a support range kind of in no man's land. And that was very interesting to me because we have been charting a lot of our assets in the US dollar pair because it's been the pair to be in basically up until just recently, based on my speculative analysis as to what I think is happening in the background. Like you alluded to, people are starting to take their profits into Bitcoin, and Bitcoin is becoming kind of a secondary layer of a measurement of success or a measurement of alpha inside of this space. So we were building this support. We saw a nice rally off of this area right here. And then we came down for our secondary test, testing that level of support. But there's no previous price history that's really allowing us to determine where these levels are coming from. So if I would just arbitrarily draw a line here, I can draw an area of support here. This seems to be where we're tentatively building the support. And that caused me to kind of ask some questions and look at some other charts and look at some other pairs. And that's when I started to see that the support is actually being built on the Bitcoin pair. So if I go to GRT BTC, we can see quite clearly here, over in this area over here at the previous buyer's climax, and then we had a breakout of that level, there is a support line that's being built in this area. And when we draw the same sort of price range, we can see this support level is exactly where the price of GRT has landed and is now currently building support on the Bitcoin pair. So that caused me to take a look at a few other assets as well. Another notable one is Avalanche. So here I've got a split view. On the top, we have the US dollar pair for Avalanche, and on the bottom, we have the Bitcoin pair for Avalanche. And we're seeing the same thing again. If we look over here, you can see that we're developing a support range where we're kind of beginning to flatten out and potentially begin to curl back up in an area where we don't have a lot of price structure to kind of zero in on where we would typically see these price candles develop. But it has come down perfectly and landed right at the previous buyer's climax of this asset on the Bitcoin pair as well. Another thing to note, just in the structure of the candles, of the price candles, is we're seeing a steeper drawback in the Bitcoin pair than what we're seeing in the US dollar pair. So what that's indicating is the institutions or just the large players in the space who are taking these trades now that the bull market has really begun to develop and we're seeing a lot of opportunity. The whales are ready to play with their Bitcoin, and they're taking these short-term trades, but they're pulling profits very quickly. So they're exiting back into Bitcoin quicker than what is occurring on the US dollar pair. So some interesting things to note. Do you have any comments to that, Teal?
Yeah, I think with GRT too is a great example, because on the GRT frame, you have this beautiful cup and handle on the US dollar chart, and it's not as well defined on the Bitcoin chart. And one of the things I think that's extremely important to go over here is to recognize that when there's new data presented, it's smart to change your mind and pivot as that data presents itself. So we've been charting against US dollars for everything for the upside, and that's worked extremely well for the reaccumulation and the accumulation patterns itself. So much so that a lot of people are like, oh, well, why aren't you charting versus Bitcoin anymore? And as a lot of these bigger funds started to show up, Grayscale buying enormous amounts of things like Litecoin, Link, a bunch of others, it was very noticeable that they were moving the market based off US dollar prices. So we started to shift. I mean, for a long time, the Ethereum chart made absolutely zero sense whatsoever when you were looking at it versus Bitcoin. But in the US dollar terms, it was textbook perfect. And that was such an interesting concept to me, because the entirety of 2017, everything was Bitcoin versus whatever else you were interested in trading. And for better or for worse, I like that. I like that Bitcoin was the reserve monetary asset of this ecosystem. But now that these bigger players have started to show up, I switched very quickly. For those of you that remember, it was like July. I instantly jumped. I never charted Ethereum versus Bitcoin again, basically, because it just didn't make any sense. But here, again, what's uniquely interesting is that on the downside, we're seeing a relationship of Bitcoin's previous highs for GRT, for Avalanche, for DOT, for Cardano make more sense than the US dollar chart. So in terms of accumulations, reaccumulations, it's beautiful from US dollar into the space. And then again, now this kind of switch and the subtle change, all the profits are being taken back into Bitcoin as these bigger and bigger investors likely recognize that why would we want to measure alpha in US dollars if we could just be sitting in Bitcoin and we're making other small venture capital plays. Let's measure even our venture plays as a Bitcoin holding and take profits back into Bitcoin as well. Because personally, I would rather sit in a volatile asset like Bitcoin instead of the US dollar, which gives me no real form or function, even as like, let's say company treasuries now looking to move into Bitcoin, because the US dollar, if you have sitting on a treasury reserve and it's doing nothing for you and you're not spending it, why do you have that extra cash? They used to sit on bonds, property, different types of assets. I like what Michael Saylor has brought to the table for this, but it's a very important conversation to understand because it offers massive tax benefits to the companies that are interested in holding their treasury reserves in any type of impairment loss situation, whether it's Bitcoin or venture capital. I think a lot of companies are wising up that why are we holding liquid US cash when we could be making venture capital bets in Bitcoin or any other sector because of that impairment loss function for what it can do for your portfolio or your more importantly, your taxes at the end of the year. So now that we see again this confluence of prices moving back into Bitcoin, I think it's extremely important to recognize because it allows us to better clarify the downside potential of the other plays we're making. I think we're right on the verge of basically face melting opportunities in this entire ecosystem. It is massively inflated right now and will continue to be that way. We see NFTs selling for millions of dollars, drunken sailors buying everything, the pixelated photos of CryptoPunks. And that to me is a sign that we are, 10/16 the way through the bull market right now. People are frothing at the mouth in every direction. And this is the euphoria is starting. So be aware we are near the end of this bull market, but just over halfway into it, I believe. And the next cycle that comes in is usually very short-lived. It is hyper dramatic. And after that, it's usually done for a few years at a time, where it kind of mellows out at least, even if we don't have dramatic drops, although there's an obvious case for why we would see an 80 to 90% drop in almost everything, which maybe we'll go over later. But I think what would be important to, let's take a look at how Cardano and how DOT has responded this way, because we saw beautiful trading ranges form in Cardano. And then again, do we see a confluence or a relationship in the Bitcoin pair? Because the reaccumulation patterns we are following in Cardano were picture perfect as well. So are there confluences and a relationship on Cardano to the Bitcoin price to the downside?
There is confluence for tentative support levels. Basically, if I want to look at this through the lens as a Wyckofian, we can also kind of look at a lot of these assets that have been performing very well that are in an obvious zone of considerable markup. And we're trying to determine, well, is this a reaccumulation? Are we going to hit distribution? What is it that is going to happen at these very high levels? Since since Cardano left its accumulation, it's now sitting above 800% markup. So it's obviously in an area where people are going to be considering, large amounts of profit taking and trying to determine the strength as to what happens next. Where we can kind of build the bullish case is what is going to happen next on the Bitcoin pair. So let me first just dive a little bit deeper into the US dollar pair. Let's just zoom into where Cardano was on the accumulation of this asset, this multi-year accumulation. I'm on a very high time frame. I'm on the 3-day time frame. So if we're going to call this our seller's climax and this our automatic rally, let me just put a range around it. I'm not going to label everything right now. I'm just trying to kind of show where Cardano was in relation to its trading range. And we can kind of put it right there. Seller's climax, automatic rally kind of sets the width of the range. Let me get this into a nicer color here. So, this was our trading range for a long time. It was a trading range, an accumulation range for approximately 2 years, 667 days before we truly left the box after our sign of strength, after our test. So, and then it's been markup ever since. So fantastic, beautiful. So now we're trying to figure out where we are right now. Is this the point at which we turn around? Have the gains been made? Is it possible for us to keep going? And that's where the interesting thing comes in when we look at the Bitcoin comparative, because on the Bitcoin comparative, we're just leaving the box. So although we in the den, we don't really post our setups on the Bitcoin pair. You can absolutely use these pairs to your advantage to measure health and potential. And I think if we draw a box here, again, you have to be flexible with these alternative currencies, because
You're on
since
GRT. Oh, sorry. Sorry. I thought you were on GRT for some reason. That was my bad.
I'm on Cardano. Since the institutions became involved, since Binance futures became such a huge part of the ecosystem, the US dollar held a lot of validity. So I'm giving myself flexibility with some of these up thrusts, a lot of the oversold condition. The trading range is going to look different. But what's occurring is we're leaving the trading range for the very first time on the Bitcoin pair. And there are players in this space who don't concern themselves with the US dollar pair. People who were buying Bitcoin back in 2011, 2013, they gave up on the US dollar. So those whales still exist and they're still playing. So when they're analyzing the charts, they very much so are looking for health in the Bitcoin pair. And there's a lot of these pairs that haven't shown a significant outperformance in a lot of these assets up until just recently. So now we're kind of getting the attention of a lot of the Bitcoin whales who are looking to potentially make some quicker short-term trades to kind of stack some more Satoshis and increase their Bitcoin positions. So when we take that into consideration, this could, and I'm not trying to sound too bullish here on Cardano. I know that there's a lot of hype in the space on Cardano right now. So I'm trying to be, somewhat reserved. But if we do come down and test these levels, I think that there could be more price appreciation in this asset, given the fact that some of these whales who are more comfortable with these assets that have been around for a long time, some bullish news coming out of Cardano, if they do in fact release smart contracts, there's a lot of factors that may contribute to some of these older Bitcoin investors, these older Bitcoin whales, quote unquote, releasing some of that capital into a shorter term trade and really driving some liquidity into the altcoin space. Because as we know, right now, Bitcoin holds 62% of the total liquidity inside of the space. So there's a ton of money inside of Bitcoin. And if some of that does get released by the whales into these altcoins, we can see some incredible moves. Again, I'm trying to control the hype aspect, but the charts are telling us some pretty bullish signals that need to be considered. And being able to shift and adapt what it is that you're doing inside of the space can help you be competitive. Because a lot of trading and a lot of analysis is you against the other trader. So being able to be flexible with your analysis and consider different aspects of the space can be quite valuable. Your thoughts, Teal?
Yeah. So again, the main point that I find here hyper interesting, more than the bullish setups versus Bitcoin, is the bearish setups and the bearish support on Bitcoin that I find the most convenient and the most interesting, because all of the charts that I've been following, everything we've been going over the den, all the accumulation patterns look sexy in the US dollar chart. But here, what I like again is if look how well the price of Cardano is currently pretty much right at that previous primary support, like just a little bit above that. Yeah, if you look how we're just at the top, it's just above that, right? That's the bottom, but just at the top part of that. Yeah, there you go.
Oh,
Well,
yes.
no,
Okay.
it would be
Yeah,
down
I'll
at a draw a line.
somewhere
Yeah.
in this area right
Well,
here.
you've got high. Well, there's a high point too, but it's actually that first big wick, which I consider the primary support.
Oh, right here.
Yeah, exactly.
Bring that down a bit.
And then we've gone right down to the top of the body of that wick effectively too.
Oh, I see what you're saying.
Yeah, boom, like that. See this
Gotcha.
area of support. So again, what I like the most about this conjecture that's been brought to the table is that when we effectively think about the way the market is accumulating value, it's still measuring most of its alpha in US dollars, but it's returning its profits back into Bitcoin. which ultimately is positive for Bitcoin. I mean, I made kind of a funny tweet yesterday saying shit coins are important because they're the manure that helps the flowers grow. And there's a lot of speculation. People don't recognize that seed stage venture capital is an enormous way to generate wealth, and it's one of the most commonly overlooked ways of investing. Yes, you get some wrong. Yes, 90% of all companies fail in every fucking sector. So you have to be pretty good at what you're doing. What's interesting here is that now you have a liquidity potential, which was never possible before in the early seed stage venture capital. You could have never bought Twitter in seed stage and sold to an open market a year later. It didn't exist. You would have to find a private buyer for your equity in that company. It wasn't until a company had an IPO, they went public, that there was actually the liquidity for you to open up the other side of the trade and sell. I think this is extremely important to understand because even though a lot of people think everything is a shitcoin, that's not the case. Bitcoin is not the be all end all, in my opinion. I think there are a lot more extremely innovative things that are going to take place in this sector, and you need likely multiple blockchains. I like the idea of the internet of blockchains being a very important type of standard. It's one of the reasons why I'm such a big fan of Avalanche and its consensus protocol. But more importantly, from a price potential, there are huge gains that are available by having small amounts of money in your venture capital system in Cardano. I think Cardano outperformed Bitcoin from March to today by almost 2 times, maybe even almost 2.5 times more growth potential for the limited capital you put in. But on this return side, the bearish potential here, where we're returning down to the bottom of these support ranges, looks way stronger in the Bitcoin pairing. And that to me is that's a new data point that I had not thought about. I'm charting everything in a reaccumulation basically in US dollars, and then looking at bearish situations for the potential return for Bitcoin, because Bitcoin is, I think, more and more becoming the monetary standard for this entire ecosystem and maybe the whole world. I've long had bets that it might become a way that sovereign nations settle debt that could put Bitcoin at tens to hundreds of millions of dollars 10 to 20 years out in the future. But more importantly now, this crack, and it's the first time I've seen it, is this changeover where instead of going back to US dollars, people are going back into Bitcoin. And now we're finding a new relevance for the Bitcoin pairing, which is not our accumulation, but rather our distribution charts as well. So I think this is extremely important conjecture. Maybe we want to go over DOT here as well, because I think what you've highlighted here with the trading range, the way we've just come back down on Cardano to that previous space. Are we seeing that in other sectors? Like, I know we haven't gone over DOT yet, so this is kind of a shot in the dark to see if there is a relationship. And sometimes there always isn't a relationship, but let's take a look here at how DOT and Bitcoin have performed.
Yeah, so when we take a look at Polkadot here on the US dollar pair, we're not far outside of our macro accumulation on this asset. And when you look at it in terms of where we've been, yeah, we've seen a lot of price appreciation inside of Cardano, but it certainly hasn't been some of the parabolic rises that we've seen, or sorry, in Polkadot, but it hasn't been some of the parabolic rise that we've seen in Cardano. And we're seeing that on both pairs, really. As far as the support / resistance flips, there's a little bit of a support range that can be built on top of the Bitcoin pair with Polkadot. So if I just draw a line here and just pull that across, I'm doing, my analysis is very, very simple for this, because what is more significant with considering these alternative currency pairs is the support and resistance. You know, being more flexible. I'm not looking for all the different Wyckoff signals, the automatic rallies, the secondary tests and stuff like that, because there is such a mix in this market when it is in concern to looking at these currency pairs. So my flexibility is very much so on the Bitcoin pair. And then you get that firm confluence on the US dollar pair. But we're just breaking through this resistance here on the Bitcoin pair. So there are going to be those Bitcoin OGs who are looking to potentially enter this asset. And we have support levels down here that are only about
Yeah, and I think more importantly than entering the sector, taking profits from it back into Bitcoin, is Bitcoin's low right now. I bought more Bitcoin this last week. I was trying to get as much fiat capital in there as possible again, because the next cycle in my mind is so absolutely astronomical. Again, so here, my main focus is the fact that it's the return to that area for support more so than the resistance that I think is the most interesting, at least in my mind.
And I agree with that as well. When we find ourselves on these large extensions, trying to make heads or tails as to where the potential support may be when you are in price discovery can be very difficult, especially on the US dollar pair where we are right now. Taking a step back and looking at the Bitcoin pair can show you levels that are closer because Bitcoin is appreciating in value as well. So the support levels are following, I guess, if that makes sense. So if you were strictly looking at USD, where your next major support is on this pair is down at the previous level of the buyer's climax, which on this asset currently right now would be a very significant drawback of nearly 50%. I don't think that that's going to happen. So we need to find where the support is. And if we look at the Bitcoin pair, you can see that the support level on Bitcoin is about 15%. So that's a lot more realistic as far as getting in at a support range and finding candles develop on support. I think going forward on the US dollar pair with Polkadot, we could see a range develop here. And we have confluence in that thesis when we consider where we are with Bitcoin. So let me just quickly draw just a little trading range here. If this is our general range, a revisit down to the bottom of this range, if we take the ruler and measure where we are right now, would you look at that? It's about 15%. So there's confluence there. It's very, if Bitcoin doesn't move, we can be range bound and we can find support 15%. And that would correlate with what we would see on the Bitcoin pair as well. So it's definitely food for thought. I know that we analyze charts all day and we have large watch lists that are on our TradingView accounts. Well, they just doubled. So we got to look at more charts and kind of take in as much data as we can, because if you are to be competitive in this market, you want to have all of the facts, and there's players looking at different things.
Yeah, again, I think this return to Bitcoin as alpha is the most exciting and important event for me, because it represents a change potentially. There are no current funds that measure alpha in Bitcoin, and I believe that will become the norm I think as everyone starts to recognize that Bitcoin was never the US dollar was never supposed to be a money. It was always a fucking currency. And people just made the layman mistake of mixing up vernacular and totally misunderstanding what currency is supposed to do versus what a money is supposed to do. And they made the inherent flaw of thinking that the US dollar was at any point a money. And it wasn't. It was always supposed to be a currency. It was supposed to be inflated. It was supposed to try to create velocity to move through the ecosystem. And therefore, you probably don't want to hold on to it because it's not an asset. It's a liability on your balance sheet.
It's to be used currently. It is currency. It is for the current time.
Yes, it's where I think money, you look at like a battery. Currency is much more like the velocity of energy moving through those wires. You want to keep it moving, and therefore you're also losing the value as you hit resistance and it gets lost, and people lock it up and they sit on the currency itself. So I think this mix up of vernacular lost to people a lot of money over the last 10 years because they were not paying attention to the fact that the US dollar was being constantly inflated around 2%, at least nominally, which over 50 years means 100% of your purchasing power is fucking gone. So there's no reason to be sitting on cash as a reserve asset, because it is not an asset. And I think this common layman's mistake that had been made in so many big companies' balance sheets is finally being recognized and then reconciled. And this may lead to Bitcoin becoming a monetary reserve for so many companies, which is what we're seeing now. Even at the Arcane Bear, our goal is to build treasuries out of venture capital. What do we need more US dollars for? I don't want it does nothing good for me if I can't even spend it on business fast enough right now. So I think everyone would like us to take a look at Link here as well. Let's take a look at Link. Are we seeing this similar confluence in price structure returning to the mean of Bitcoin on the downside? Because we have such beautiful accumulation ranges on Link to US dollar here as well. I know Citigroup just made an astronomically high price prediction, saying they could outpace Bitcoin. But who trusts Citigroup? They showed up late, don't know hardly a goddamn thing. I wouldn't trust them to try to make a price prediction when they just got here. They're like, hey, we're just going to start saying random, really incredible shit and hope everybody pays attention. I do like Link. I do believe oracles provide an extreme value to this ecosystem. But again, my main interest here is, are we seeing that return on the downside of Link to Bitcoin? Because again, the reaccumulation patterns were showing such a strong reconciliation on Link to the US dollar. What about to the downside?
Yeah, I think Link is kind of an interesting pair because we have very different structures developing on those pairs. Now, Link USD, we've been charting this in the den, and it's been a fantastic performer for a lot of people. And we got our backup. So, you know, again, I'm not going to draw all the signals on these trading ranges here, and I'm on the high time frames, but, you know, I'll just quickly draw a quick range around it, you know, buyer's climax, automatic reaction, spring, and we've been testing the top of the box, but the follow through has been rather lackluster. And when you kind of are expecting, because when you leave the box and get these successful tests, beautiful test with a ton of demand coming in on this candle here, beautiful demand signature, all the signs are there. Very, very healthy chart. I think structurally it's beautiful. And, you know, I'm not worried about the long-term potential, but when you look at what's going on with Bitcoin, there is potentially liquidity issues because of the fact that if any Bitcoin investors were behind, like Bitcoin whales were behind the momentum in Link's last really epic run, the kind of run that arguably sparked a lot of the interest back into cryptocurrency. Link was one of the early movers early on, exiting the bear market. Incredible momentum on the upside of Link from like 30 cents to $20, like really, really incredible stuff. But if Bitcoin whales and Bitcoin investors were behind some of that, then we're not quite where we need to be in terms of the Bitcoin pair. So that's probably contributing to the lack of momentum inside of Link. Another asset that has similar structure is Band. But if we just draw a quick range here on Link, just keeping it really simple. Oops. If I can get it to work. We are in a reaccumulation after decline, much like we are on the US dollar pair. However, we're still range bound. We haven't seen that back up. So what we need to see, and we can get that in the US dollar pair, is just a continuation to the upside. We are appreciating in value over long term. We're not seeing those quick, really face melting short moves inside of Link, but we are overall appreciating in value. So this is good. If you're in Link, there's really nothing to be worried about. Where I think the momentum is really going to pick up inside of Link is when we finally break out of this trading range on this reaccumulation after decline, and the Bitcoin pair can catch up with what's occurring here on the US dollar pair. So just another thing to consider, you know, why is Link taking so long to take off? Well, this may be a contributing factor. That 62% of available funds all held up in one asset is not willing to take the risk on Link. And although there are many, many newcomers to the space, we do very much so have a lot of influx of funds in the form of retail. The real money is still inside of the ecosystem. So it's that transferring of wealth internally inside of crypto that really gets those momentous moves. I don't think that we have reached that kind of crazy parabolic excitement, Bitcoin in the news type retail just yet. So the ability for retail to appreciate this asset is going to be slow, and that's what we're seeing. But if we get the signals with the large amounts of liquidity, then we can probably see a really nice appreciation inside of this asset. And I agree. I think Link is a fantastic protocol. Oracles are very needed inside of the space, especially as DEXs become the norm. We need to be able to bring outside data into the blockchain. So it's very much so required, and it's integrated with a lot of protocols. So the value proposition is certainly there.
Yeah, you
Thoughts,
can see
Teal?
what happens with illiquidity on the Kraken exchange via that wick that you saw on Cardano. When there's no price balancer, it's simply based off the liquidity of each exchange. You can have this massive price change, and this is a conversation probably for another episode. But I've been going around and looking at these crazy market caps that certain companies have, hundreds of millions, billions of dollars in market cap. And then you look on the other side of the trade on Uniswap or any of the other dexes, and they're like $8 million in liquidity. You're like, okay. So once these things turn around, the door is incredibly fucking small for people to get out, and we are going to see a massive correction in this entire ecosystem, shaving profits off into strength, or more importantly, again, I think we're kind of coercing and getting some tension out here is that, and I see some people making comments, it's good to see me change my mind about measuring alpha in Bitcoin. Look, from 2017 or like 2000 on, or what, basically 2013 onwards, I was only charting against Bitcoin. In 2018, 2019, and specifically when I saw how perfect and textbook Ethereum was versus US dollars, I switched because that's how everything was forming. Now we're seeing the downside change, which is Bitcoin now becoming the nominal reserve asset, and ecosystems funneling back into Bitcoin instead of USDT, because USDT offers no volatility value and no necessarily function over top in terms of what a money is. So people are using often USDT to get into the ecosystem, to measure it, and then going back into Bitcoin to hold profits. So I've changed my mind 3 times to get here, because I was only charting against Bitcoin, and then I changed my mind to chart only against US dollars. And now I've changed my mind to chart against US dollars for the upside and then Bitcoin for the downside. So it's like this mixed media. I think what's important here is to remember that there is never get married to any one particular idea. It's always important to be evolving your thesis as new data presents itself. And I'm never going to like stick to something that doesn't hold data anymore. And once the data changes, I change with the data. I'm really just trying to listen to the markets. So my thought again here, I think is, well, it's kind of twofold. Number one is there is a big lack of liquidity on the other side of this trade, and it's pretty much Bitcoin holding that up. We have a supposed $1.6 trillion market cap on CoinGecko and CoinMarketCap, and I guarantee hundreds of billions of dollars of that is nothing but a hallucination. There is nothing on the other side of that trade right now. When you have a company that has a $500 million market cap and less than $3 million on the other side of the trade, this shit is gonna fucking come down hard. So if you are in the venture capital space, like I said, I think taking out the initial is a clear and present way to make sure that you won the game. You're like, great, I take out my initial, I let the rest ride, I continue to build my venture capital sector without having anything on the table as risk, because it's all gravy at that point for the ven cap sector. Secondarily, moving that profit back into Bitcoin now allows even further growth of the profits that you just made from Cardano or Avalanche or GRT, because now you've gone from a stable asset like the US dollar into GRT, from GRT back into Bitcoin, and now receive 20% growth in Bitcoin from the day you closed out a position in GRT. This new kind of like hopscotch for investors, I think, is going to become the normal. And until the data changes again, I will continue to listen to what the markets are saying, because that's all we're trying to do here. So I had some people are asking questions about Populous. I think it'd be fun to take a look at Populous just for fun. The reason I think that's important is because Populous was one of our venture capital plays back in 2017. A lot of people gave us shit. They're like, "Oh, Populous failed. See, it's not worth anything today." You've got control of the screen here. Do you want to show us Populous for fun, just to see? Because I got a
Sure.
shit ton of Populous sitting in a ledger somewhere. And for me, guys, what I did is I let it basically go to zero, because I was not interested in what it's done. Yeah,
So we're
so here
coming
you can
back.
see the massive downside, but back from 2018, and it's made a huge run up to where. And again, we're in a bull market. First off, let's measure the percentage. Is there what's the percentage growth there from March, April?
Oh,
Yeah,
from
just
March.
there's fine. Yeah, I like that March spring date. It's kind of my go-to for where the bull market started. Okay,
We
so
are up 1,400%, 1,500%.
you now have a 14x gain, which is higher than Bitcoin, might I add, only by 200 to 300% on a venture capital play starting in March. Now, again, what I want to go over here, and why I think it's fun to highlight Populous, isn't necessarily to talk about it as a program, as a platform, what it's doing, but it's to understand how venture capital works. I have not touched any of the money that I put into Populous because I don't care. I changed my strategy. I took my initial when it was up and I just let the rest ride. If it goes to nothing, that's my stop loss for venture capital. Here, I've just realized it's probably up again. I can probably go look and find out this money in a ledger I forgot somewhere. So the important part here is to remember that when you're playing venture capital, don't put more in than you're capable of sleeping on for a long period of time, because that's how this game has been played for a long time. This is the first time you can actually move liquidity in and out of any of these things. So we see this massive move in growth, and this is versus Tether. What about versus BTC? Are we seeing a confluence here just to try to further dive into this thesis? Because again, when you
Yes.
if you guys come up with a new thesis, it's always important to keep reiterating. Don't just find one chart that fits your bias and go, great, I was fucking right. You need to find that chart and prove it multiple times. And it does. It looks like we're seeing a like a bias of support basically based off of its previous preliminary support back in July of 2019.
Yes, we're seeing, we're still in
Support and resistance. I would actually go lower than that, but
well, I'm just going at the change of character here, but yeah, we can bring that down a little bit here and capture a little bit more of the price action. But Populous in both charts spent a lot of time in the oversold condition, and we're now, this 1400% move is just its sign of strength. So based off of Wyckoff analysis and what we do as Wyckofians, potentially, given the signals and given the structure inside of this asset, I have not dove into the fundamentals on this. That's often the demand side. You have to make sure that the demand is there, but the technicals are showing demand. This could potentially just be getting going inside of Populous. We haven't gotten the sign of strength on the Bitcoin pair just yet, but we are seeing the sign of strength on the US dollar pair. So the chart looks good. It's very positive. I don't know much about Populous, but the chart looks good. That much I know.
yeah, again, there's always this mix. So Populous back in the day, one of the interesting ideas that it was used for an invoicing platform. So for those people that don't know, you can take an invoice to a bank if you're a big enough company and take a loan out based off that invoice. So say I was a boat builder. I've got the down payment for this boat, but I can't actually build the entire yacht. So I take the invoice to the bank. The bank goes, great, you've been a well-performing company. We're going to give you a loan against that invoice based off of your previous functioning loan capabilities. So Populous was supposed to be, and I'm not sure, I haven't looked in a long time, it was supposed to be an invoicing platform where you could take loans based on the invoice of your already performing company. So this is, I think, again, it's important to recognize that the DeFi sector specifically is huge. Now, a lot of people have been asking about NFTs lately. My current conjecture is, first off, okay, let's give you some plain fact numbers, right? The art industry in totality is only $60 billion. Now that may sound like a lot of money, but it's fucking chump change, first and foremost. If you include the music, the entire music sector, from sales, collectors, guitars, all that shit, is another $60 billion, give or take. I think it's like 49. This is $120 billion in average yearly value. The real estate market, on the other hand, is worth $230 fucking trillion and is moving around $1.8 trillion per year in nominal value. NFTs in the art and collectors world is significantly less interesting to me than the NFTs of, say, a property that you might own, and the ability to micro or fractionalize the ownership of property or cars through something like Airbnb. Or what if you had a Tesla app? Each car was a single NFT, and every time you use that, you could earn Tesla tokens, and you could become a part owner in the car just by using it like an Uber. And over time, you could book that car whenever you wanted, and you could rent that car out based off how many percentages of that particular car that you owned, etc. NFT, or fractionalization of ownership, to me is probably the most exciting part about NFTs. And I give very little shits about what I believe is an overinflated art market right now, because it is at max for years and years on end only been 60 billion, when you have other assets like the traditional, again, the sector of just around owning real estate. You put like a property on an NFT, you fractionalize the ownership via the tokens. Now we're talking real money. Now the collector's space is big, so I'm not saying there's not a potential there, but I am in no way capable of quantifying the value of an art piece in the middle of a fucking bull market, when there is so many drunken sailors sloshing around money that makes very little sense right now, when there's nothing on the other side of the trade. I will be interested in NFTs when the market collapses and you find a true evaluation of what these things are worth, because it's probably pennies on the dollar for what they're going for today. So even though I like art NFTs, I like collectors, I think there's something super cool there. What's unique about the market, I think about it like mountain climbing. When we get to the top of one peak, we get to see what the next 10 years of peaks look like. It doesn't mean we're there yet. We are at an over evaluated space for the entire NFT sector, and when it comes collapsing down, it's going to lose a shit ton of value, because there's nobody on the other side of the trade to actually buy it. Now, again, a lot of the people that have enough money to buy a $150 million art piece don't really care because they're not going to sell it in the bear market, because they likely don't need money because they have $1 billion somewhere else. If you're buying a $150 million art piece, it's because you have fuck you money and you're not caring to sell it. You just want that random thing. So we could make some conjecture that NFTs are quite strong, but I think importantly, my sentiment here is that I'm much more interested in the financial sector and the fractionalization ownership of massive assets, whereas again the entire art and music sector is a fraction, not or barely a fraction, of what the real estate sector provides. And or even the invoicing sector. I think the invoicing sector is close to $500 to $800 billion a year, which is tenfold higher than the art and music sector. So I just try to look at nominal figures. This is a finance game. I do think collectors items, especially 5 to 10 years from now, is going to hold more and more value. But more importantly, the fractionalization of ownership of one thing as an NFT via like a token, because corporation, for those of you that don't know, like I own property in Costa Rica. I own that property as a corporation in Costa Rica. So I own the corporation. The corporation owns the property, and the property is divided into shares based off that ownership. So I could sell a portion of this property by selling a portion of the shares of the company itself. And that to me in the digital world is fucking extremely exciting. And from an art collector standpoint too, even more exciting, because I don't have to buy just one art piece. I could potentially buy a bank or a basket of art pieces and have a fractionalized ownership of that basket of art pieces based off my nominal token reserves of that basket. That to me is extremely exciting, but I am in no way prepared to value it today based off this, what I believe is an extremely inflated art sector. Again, based off the idea that you have apparently a $500 million company with $6 million in trades the other side. When this shit turns south, and it will, it always does, those things are going to sell for pennies on the dollar. And that's when I'll be interested, because I will have a very clear understanding of what the market thinks their value should be. Whereas I'm not an art collector. I'm interested in business and psychedelics, basically. So I don't have no way to properly evaluate the NFT or art space right now. I will let the market do that for me in the next bear cycle. I saw Woo just popped up, and there was you had been charting Woo in the den as well. Do you want to maybe take us over some things that you find interesting today before we kind of round off the show?
What, you're making me give away my top secret picks?
Oh no, don't do that. Well, it popped up on the
No.
screen, Baloo.
Yeah, I know. Yeah, we've been I've got an analyst in my server who is just a magician when it comes to, or in our server, sorry, that is just a magician when it comes to finding these low cap gems. Now, obviously, this is not financial advice. I haven't dove into the fundamentals. I have a very basic understanding of what this project is doing, but I do know that they are trying to figure out a way to offer trading for high frequency traders inside of decentralized exchanges. Obviously, fees are a very big issue, not so much on other protocols like Binance Chain, but for those that, you know, want to stick with kind of the ERC20 tokens and the Ethereum network, fees are very, very difficult to deal with. So what Woo is trying to do is they're trying to figure out a way to kind of derive value against these tokens and basically offer zero fees for the purposes of derivatives trading. So interesting project that we can kind of monitor and see how that develops. But the price action is, you know, we're just leaving an accumulation, very strong rally. So, you know, a lot of the gains have been made and there are a lot of traders in profit taking right now. But we're also in, you know, tentatively forming a range here where we could potentially see some higher levels. I mean, we are in a bear market or bull market, so there is potential there. Yeah. Go do your own research.
Yeah. Again, an important to point out here, the idea of venture capital. We see these massive gains, and then we also see massive deflationary moments. It's probably a smart thing to do is to look back at like ETHLend and AAVE before it exploded, because it was worth like 40 or 50 cents, I think, back in the day. So when you see the deflationary aspect of a bear market come in, or I guess, the sentiment again, which is there's nothing on the other sides of these trades. If you go look at Uniswap, actually, you want to pop open Uniswap and look at the other side of the trade for AAVE, because a lot of guys, for instance, Bear
Like
Family,
the app Uniswap.
yeah, take us over to Uniswap, the actual app.
Okay.
What I want to point out here.
I think I need to.
Oh, you can make me host if you'd like as well.
Yeah, I'm gonna make you host.
Okay. So what I wanted to point out here, and this is kind of my relationship with the current thoughts on
Did I make you host?
Yes, I believe so. There we go. So this is AAVE. We like AAVE. And I think this is an extremely important part to understand, especially because we study Wyckoff. For those of you that have been studying with us, you will know who the comp man or the composite operator is. These are generally the large pools that basically control the price off their ownership of the stock. Now, one of the interesting parts about the automated market maker is it allowed everyone to become comp man to some degree. You can put up both sides of the trade. So if you go to ads here, you can see that one person added $6,000 in value, 1.997 ETH and 7.7723 AVE. So every time someone adds a little bit of ETH or AVE, they're holding both sides of the trade. So if I were to hit trade and I were to sell the AVE, I would get more ETH and they would lose the ETH that they have posted and they would have more AVE. So they're effectively risking the idea that one of the assets on the other side is going to be the one that they favor. You have 39,000 AVE and only 10,000 ETH on the other side of the trade. That means you have approximately $16 million of ETH on the other side of the trade. So if AAVE was recently being traded at a few dollars and you have Ethereum, which have been trading at 80, most people are probably going to go back into ETH, or more importantly, back into Bitcoin, which is predominantly what we've been going over this entire episode. This is a small door, a door of only 10 million, especially if we click on the AAVE pair itself, you'll see that the liquidity is even smaller, $16 million effectively on the other side of the trade. That is incredibly small, right? And what you need to remember is that if it's on Binance too, the market makers do the same things. If they see the market starting to dip, they take the other side of the trade out and the volatility increases massively. That's why you have such steep declines in prices, is because nobody wants to hold up the other side of the trade if that asset is becoming worth less and less and less on a daily basis, because now you're taking an asset away from that one person who's got Bitcoin on one side and AVE on the other and going, well, I don't want to lose my Bitcoin. So what do? They'll pull their liquidity from the pool, and the pool becomes even more volatile. This is extremely important to understand, because what is AVE currently, CoinGecko? AVE's current market cap is in the hundreds of millions or something like this, right? Boom, AVE. You have a supposed $4 billion market cap. But only motherfucking $16 million holding up the trade. That is absolutely unsustainable. There's no way that when this turns around, it's going to look good for anybody. So keep that in mind, guys. Definitely shave off profits as we move into strength, because that is a big deal. When you only have $16 million on one side of the trade and a supposed $4 billion market cap, whoever is holding that extra liquidity, when they get scared, they're going to start to dump. And these small players who are holding up the other side of the trade in the automated market maker and in companies like Binance, they will ditch the losing position, and that market maker's volatility increases massively. This is how comp man works. And what's fun is you get the opportunity to understand what it is to be comp man, because you can go and you can add liquidity to the pool, and you can watch your Ethereum side dwindle while your AVE side grows in the middle of a bear market and go, well, fuck, I'm just losing money now, left, right, and center. And that's effectively what impermanent loss is. It means you're losing on one side of the trade. So it's important to understand how this stuff works because most people don't. And right now, again, if you have a $4 billion market cap on CoinGecko, and again, we'll just go to CoinGecko, how much of today's measured market cap at like 1.68 trillion or something, well, $1.593 trillion is nothing but a hallucination in value, right? And that's why I'm so eventually extremely bearish on the NFT sector, is because their side of the trade is being held up by this understanding that some guy's probably got $50 million in AAVE in his wallet, not realizing that if he tried to sell that right now, he would destroy the market. There's nobody holding up the other side of the trade, and they won't hold it up in Binance. They won't hold it up in Huobi. They won't hold it up in OKEX. And we can go and look at that. And it's not just about Uniswap. We can go look at the exchange balance stacked for AAVE on all the exchanges as well. And we can realize that these are thin trades with apparently extremely large market caps, right? And not only that, look how much more AAVE has started to come back onto the market recently. More and more, it started to sell. And this is actually a big capitulation for the upside or for the downside for AAVE at this moment. And again, the biggest exchange, Binance, is only holding 1.697 million fucking dollars. Or wait, or is that 1.69 million AAVE? I'd have to double check on that. I don't know if that's it might be related in AAVE. So it might be 1.69 million AAVE effectively. I'd have to double check on how they're measuring this, but I believe that's what it is. Scale mixed currency AAVE currency. Okay,
Yeah, I
currency
think
in US dollars. There we go. So here,
this
let's
is a
take a
very
look.
good point to drill home.
Yeah, here you go. You've got them only holding up apparently Binance is holding up $680 million of the trade, but even still, that means it's 4 times less than the apparent liquid supply right now. It's not a great sign. And all of it combined, does it have we have to AAVE stacked. Anyways, the point of what I'm trying to make here is that there is a very thin door that is going to open up when this bear market starts. Not now, not today, but in the future, where you're not going to be wanting to sit on the other side of this trade, and no one will, because it's going to collapse effectively. There's no reason why we should be at a $1.68 trillion market cap when it's being held up by basically a fourth of the actual available liquid supply at that moment. And no, I do not mean AAVE is bearish. Everything is bullish in a bull market. That's kind of the funny things about the bulls, is their fundamental and technical analysis is usually thin. Everything goes green. Everybody starts throwing money in, and nobody thinks about what tomorrow looks like. But when the market cycle turns, everybody turns bearish, and it happens usually overnight. So it's important to keep this kind of stuff in mind. I think it's a very valuable conjecture point to kind of end the episode with. We probably could do entire episodes for the rest of the bear market or the rest of the bull market on that, because there is a lot of inflationary value happening in this ecosystem right now that has not yet been accounted for. And when the bear market starts, you'll very quickly see how deep a bear market can go. I think we'll see corrections of 80 to 90% in almost every asset, because we just very clearly could see that there's only a 1/4 of the liquid supply holding up this entire price point for AAVE. If people start to sell, which they do, likely to go back into Bitcoin, most of these things will come collapsing back down.
Yeah, I think it's really important, especially if you're new to trading and investing. It's really easy to kind of forget what you're doing when you buy a coin. When you buy a coin, somebody has to sell it to you. And when we're in a bull market, it's very easy to sell coins to people because everybody is buying it. Okay. It doesn't matter what it is. People are going to buy your coin because we're in a bull market. Try and sell that same coin when nobody cares about crypto anymore. Try and sell it when everybody is rushing for the exit, and the person that takes the biggest loss gets to the front of the line. It's very difficult to sell at an appropriate price, or it's just take profits on this side of the bull market. Take profits on this side. It's very important.
Yeah, absolutely. Sell into strength, ladies and gentlemen. Well, Baloo, thank you. This has been a great Bear Forage. I'm glad we're going to do this once a week to start, and then maybe we'll look at doing it more frequently. Maybe Baloo will do a morning show. I'll do an evening show, and then maybe Morgan will do an afternoon show. Who knows? We just want to try to provide as much valuable content during the bull market and the bear markets as possible. Because the bear markets are the best time to actually be accumulating. This is one of the best times that you could just to make sure you know where you are in the market, so you can get out before that small exit door has everyone running away from the fucking house fire, burning shit house that we were potentially walking into a few months from now. So I'm extremely excited. Thank you guys all for joining us today. If you want, join the Arcane Bear by going to the links down below. It says arcanebear.com/Baloo. Anyone who signs up under those links is helping support Baloo because there's direct creator commissions for those ones. And not today, but one of these episodes we'll give a discount again to encourage signups. But at the moment, we don't like giving discounts because it's already extremely valuable group, and we've seen that with the feedback we've gotten from everyone. So remember, ladies and gentlemen, the disease of the new investor comes from over emotional trading and lack of education. So the best way to fix that is to join a healthy environment of other traders and investors who are on a daily basis going over things. We have over 900 private investors in the group right now. They're all working and collaborating with one another. So be sure to go to arcanebear.com/Baloo and sign up for your private membership today, because it is no risk. If you sign up and you're not happy for some reason, we'll just give your money back. And we don't really accept crypto because we'd rather take your fiat from you, because we'll spend that right away on hiring more people, hopefully building more products. But we'll just give you a no questions asked refund. We've only had to do that maybe like 15 times out of hundreds of people that have signed up. So great job so far. Blue, thanks for joining us today. I hope you had fun. You want to leave us with any parting gifts of Baloo's bare necessities?
Trade safe. Be excited. This space is very exciting. There's an incredible amount of innovation in this space. The asymmetry inside of this is really exciting. But don't forget that these markets ebb and flow. The tech is incredible, and we can really get lost in the fact that this is, really potentially revolutionizing our world. But the biggest downside to that is that these assets are publicly traded. CompMan exists. So don't forget that, and realize that these things will ebb and flow, and you need to, keep skin in the game and keep interest, but realize that there's an ebb and flow to this. So trade safe out there.
Awesome, guys. It's Tio with the Arcane Bear and Baloo joining us on today's Bear Forge. We'll do these once a week, probably every Wednesday. And for the private members, you guys all get PDF updates around these same thoughts, comments, and closer looks at everything we've gone over today. We'll see you on the next episode. I don't have any exit or intro to give you because we're on Zoom. So we're just going to end the stream by clapping. So clap your hands, ladies and gentlemen. This is fantastic. It's great to be here with you, and we'll see you on the next live stream. Actually, I'm going to do a live stream later today as well. In case anyone wonders, I'm going to do a second live stream today. So you get 2 episodes today. Aren't you guys lucky?